Morning, everyone, and thank you very much for joining me. It's the morning market view. It's Wednesday, the 12th of October. My name is Russell. I'm a senior market specialist at FXCM, and my email address r@fxcm.com. Just going to bring up the high risk investment warning. We'll run for the next 50 minutes approximately, and then we'll switch to the crypto minute. Hey, KD, good morning to you. Rob, morning to you. Pleasure to have both of you on the webinar. A pleasure to have everybody on the webinar. Thank you very much for signing in and joining. Just going to bring up our market commentaries disclaimer. References MarketScope, TradingView, and Bloomberg. I wanted to be fairly quick here if I can. I don't think I'll read all of the email. Maybe just the headline in the first sentence or so, just so we can get to the charts. The email is from Bloomberg, 5 things to start your day, Europe edition. First headline says, reads, on the line, the Bank of England told lenders it was prepared to extend its emergency bond buying program past October 14th, which is this Friday, if market conditions demanded it. And this was via the Financial Times, citing 3 unidentified people. All right, I'm going to move to the next one. A game plan. President Joe Biden said the US has gamed out responses if Russian President Vladimir Putin uses a nuclear weapon in Ukraine. I'm not sure what that actually means, but it is an extremely frightening headline. The president declined to elaborate on the discussions. Gas price cap. The European Union is moving closer to proposing a temporary overhaul of the electricity market by limiting prices of gas used for power generation, even as pressure mounts for the bloc to impose a broader cap. EU energy ministers are gathering in Prague today to consider this. Next headline, the Fed's path. Federal Reserve Bank of Cleveland President Loretta Mester said the central bank should stick with its approach to shrinking its massive balance sheet, notwithstanding ongoing volatility in financial markets. Next headline, investigating Credit Suisse. The US Justice Department is investigating whether Credit Suisse continue to help US clients hide assets from authorities 8 years after the bank paid a $2.6 billion tax evasion settlement and pledged to tackle the issue. Coming up for this session, European stocks are set for declines as worries over recession risks and interest rates continue. Investors will be poring over minutes from the most recent FOMC meeting for clues on the Fed's outlook. The IMF publishes its fiscal monitor report. Germany and the Netherlands unveiled a multi-pronged approach to help cut EU energy costs before a meeting of ministers in Prague. ECB's Christine Lagarde gives remarks, while the Fed's Michelle Bowman and Neil Kashkari are to speak today. We're going to US PPI as well as GDP, trade balance, manufacturing production from the UK. Hanson, Crop Energies, and PepsiCo deliver earnings. All right. So just going back to the real rate. Let's maybe go to the daily here. Yeah, I think the daily is, so this is interesting. Maybe you can go even lower. Here we go, Tuesday. All right, so Okay. So I was at my at my desk yesterday, and I'd effectively closed up, for the day. Was sort of gone into early evening, and I looked at the charts, and there was a considerable risk on move out of nowhere. It just sort of, don't know if you guys saw it, but there was this big spike around, I would imagine, about maybe 5-6 p.m. ZA, so maybe 4-5 UK. You can see here is the real rate pushing down. Yeah, it's the real rate pushing down. We've got the DAX at the bottom here. DAX pushed up, and then the real rate actually corrected somewhat. I was very interested just to see the price action, because effectively, when we take a look at the weekly chart, so this is what we spoke about yesterday, the chart's overbought. Chart's overbought. So, and the first sign of sort of normalization was at the beginning of this month, and we had the rallies. But of course, that was really a daily correction of an overbought RSI. So this overbought condition fell as we came into October. You can see the DAX jumping here. But I think the weekly is really the big deal here. I know we're repeating a lot of what we said yesterday, but the size of that spike yesterday was very interesting. So when we get the correction on the real rate, I think we're going to have serious price action on the risk asset side. So I think we'll see dollar come down. I think gold will respond by moving up because it's of its relation to the dollar. Stock markets, I would imagine, are going to spike. Major spike against the US dollar. Cryptos, which we'll talk about in the next session, probably benefit as well. But the idea here is not to get lost in what's really a normalization of an overbought condition. I think the big deal for us is tomorrow's CPI. We'll be in a much better position after that CPI comes out, and I think that we must be not looking at the core. Everyone's going to be looking at the core. We want to be looking at median, okay, which I don't think it comes out quite at the same time, because it's actually calculated by it's created by the Cleveland, by the Cleveland Fed. So we want to see the moderation coming here. So this is going to be updated over the next, 24, 48 hours. I'm not quite sure when they'll release it, but the moderation here is key for actually interest rate policy. So again, I'm going to stress, I think this is going to be a difficult quarter because of an overbought condition, which to me needs to normalize, but without any sort of moderation. There's still an underlying driver, a tailwind for the interest rates. So now we sort of stuck between a rock and a hard place. Which market force wins out here? Is it the overbought condition, or is it the no moderation condition? And I don't know. Nobody knows. So we've got to just keep an eye on that, because just on that speed of that bounce yesterday, I think there's a lot of potential energy here. A lot of bottom pickers, so to speak, just dying to get into the market here, and it's going to make, in my sort of estimate, a very foggy environment, because I think it's the bounce could have legs. I think we're going to get bombarded by the media that the worst's behind us, but I really want to see the median start to moderate before I would concur with anything like that. The interest rate environment has just saw something of interest yesterday, which I wanted. We have mentioned ARC Investments before, the ARC Innovation Fund. I wanted to bring that up as well. And the reason that I want to show is because Cathy Wood's now written an open letter to the Fed, urging them not to cut. So I think there's some sort of, I would imagine, panic is probably driving that. I saw one of the ARC investment, one of the ARC financial, one of the ARC analysts calling $1 million for Bitcoin, which I think is a huge detachment from reality. So let's just do the math here. Just going to bring up a calculator. All right, so we're going back to the 1st of Feb 2021, and you can see, just take a look at the H here. The high is 159.70, and we currently at 35.65, so we're just going to go 35.65 minus, what was high again? 159.70, 159.70 divided by 159.70. Okay, so if you bought at the high, you're down 77% on your capital. Stop losses. Okay, so come back from that. She's buying the dip. So the last thing I saw she bought was Adobe on the dip. Let's just take a look at that. Okay, so she's betting that we're pretty close to the lows here. I hope she's right. I think that it really, her letter's not going to sway them, but what is going to sway the Fed will be median inflation, this series here. Okay, so if this starts moderating, ARC Innovation Funds actually probably going to be a massive beneficiary of that, you know, because it's the stocks like Adobe, the tech stocks, the growth stocks that are going to respond to that rotation in monetary policy. But that's not going to happen. It's not going to happen until we get the CPI moderation. So it's going to make for a very, very interesting quarter. In my opinion, we've got to just watch this very, very closely. It's just gone to the hour. I think we can carry on this discussion in the crypto minute. Just before I cross over, any questions? Any questions here? It's a little bit of a, I guess, a divergence from the normal instruments we look at, but I read that yesterday in Barron's, and I thought, you know, it's something worth just discussing this morning. All right, let's conclude here. we'll go through to the crypto minute.